Stock market analysis and projections on the S&P 500. Please do read this important information. Take a moment and read this slide. It tells you about our approach to analyzing the markets and what's important about you and how you use our analysis, and certainly the very important aspect of trade ownership. You must own your trade, no matter who you get the information from. Announcing the askSlim Cycle Analysis Workshop Special. Learn my method of analysis, the one that you see our team using all the time, developed over 50 years. Took me 2 years to write this and over 6 months to produce it. There are 24 video modules plus many tools for text videos, so you can learn a ton about charting in the markets. You'll get online lifetime access, and there's no special platform required, and you will never look at charts the same as you did before. It's going to improve your directional decisions. You'll be able to project in time and price. Bonus items include a complimentary ticket to my workshop, Behind the Cycle Analysis Curtain. That is a $495 value. You're going to also get new cycle analysis teaching addendums added, and another great addition is that you will get to save $400. That's $897 versus a normal $1,297. And you're going to get, if you're a level 4 member, an extra $100 discount. So if you're a level 4 member or become one, you're only going to pay $797 for this amazing workshop. Information right to Matt at askSlim.com. But I have more to show you as we switch over to our homepage. Go up here if you want more information. Slim Cycle Analysis Workshop on sale, and click on that. You're going to be able to see what's in this workshop. You'll be able to buy it if you want to, and you'll be able to see all of the stuff that's included in here, and the video that I produced that gives you a great introduction to this workshop and cycle analysis. Also, if you scroll down further, you'll be able to see what is in every module that's in this workshop. Just an amazing amount that you will learn. It'll take you a while to go through it, but after you get through it, it's going to be just an incredible amount of information that you have, and you will love it. Again, it's a $400 discount, $897, but if you're a level 4 member, save an extra $100. It's only $797 for this amazing, really life-changing workshop on cycle analysis. Please do sign up now. Stock market, S&P 500, that's the SPY cycle analysis and projections and our level 4 indicators. And you'll take a broad look at the markets as we look at the MCM, and I think you'll get a good sense for what market conditions are as we move forward. Let's take a look now as we look at the charts here in SPY. Avi did a great job in this in the Future Speak show, talking about the conditions of the market and the importance of following the momentum indicators along with the rhythms in the market, the cycles in the market. So it's no secret that we have talked about this being a corrective period where this yellow oval is. It was bigger before because we expected that the drop would be more significant to the downside. I anticipated it would be somewhat over 6%, which is what the probably average is in bullish corrective periods. You could see this one here was 5.9% right there. What happened was that so far it only fell 3%. But it did come down into the timing window that we expected. Certainly not the magnitude that was expected. And now there is a quandary. I'm going to get a little closer in here that you can see. We were looking for the potential for a trough here in November. So that's the timing for that November trough, and it came right on the election day. Here is where the December trough timing, and I'll show you this on the daily chart also, and we don't really know. And the market's going to have to prove it to us whether this was the end of this corrective period, or that's yet to come in the next cycle that takes you out over here into early December. We've talked about these two scenarios for a number of weeks, and right now with the 3% decline, well, that certainly does not seem like it would be enough, though odd things happened around events where the patterns do get skewed in magnitude and in timing. So what we have in here is the reversal scout, which has remained positive through this whole period in here of potential correction. That correction was so mild so far, and I have to give it credence to the fact that that might have been it, and certainly nowhere near the level of decline that we expected, though the timing would be correct, or the fact that the Donald Trump election has skewed it, and the market got one more lift to the upside with that corrective period yet to come. This was an important extension level from the monthlies at 595, and of course it got through there at 598 today. And this upside level of that projection right there is at around 612, which would not be ridiculous, especially if this actually was the low and the market was in this rising phase already. And this rising phase projects out to a rise out into early 2025, which has always been our analysis, that there would be a corrective period here, and then the market would then move up to higher highs into 2025. That has not changed. And you can see in here the beautiful rhythmic motion and cycles in the market that show up very well. Please do watch the special that I put out earlier in this show about our workshops. Go to workshops at askSlim.com front page and click on the special up on the top, and you'll be able to see how to get a very large discount on our cycle analysis workshop, as we are in this special period that we have for that. You'll learn all about how to do this style of analysis. Right now, this is still where we're looking for a better idea on the markets, and all we have right now is that they're positive based on everything that we're seeing. Before I go any further, I want to bring you to our market condition monitor now, and then we'll come back to those charts. And you will see as we look at the market condition monitor, this is set to intermediate style for traders. That means your holding period is like 3 to 8 weeks, and maybe you're doing option positions and stuff like that. And you can see in here that the SPY, QQQ are very bullish, IWM is only slightly bullish, and DIA is slightly bullish. You can see that as we look for the intermediate term. When we showed this a couple of weeks ago, we said that, well, the shorter term was in corrective phases, and there were indications that world markets were also getting a little more sloppy. Interestingly, the world markets, they actually had some declines while our market was rallying, and that was very much in alignment. When I switch to the short term, you can see in here for this trader style that these are all SPY, QQQ very bullish, and IWM and DIA bullish. So all of that is showing you that our momentum indicators have been saying the market's bullish and continue to say that. Now, if I go into the near term, which is, kind of your 3 to 8 day holder, very short swing trade, you can see in here that these are all still very positive. If you were using our MCM, you would be looking at the near term for a sign that this upside move was ending. Right now, we don't see that at all. So we're looking at the stock market indexes in here. And of course, I'll go back here to the intermediate, very bullish or slightly bullish, and the short term here, very bullish or bullish. So all of this is extremely strong. When I look at that, please do become a level 3 or 4 member to be able to get the market condition monitor, which I think is extremely helpful in your analysis. It would certainly have kept you from being negative on the market, even in a time when the cyclical patterns said it was likely that a steeper correction would come. The indicators really would not have let you be confident about that, because they were quite positive when you looked at them. So that's a look at the MCM on the markets. Let's come back to the chart. Again, this is the weekly chart and this big DJT upside move right over there. And now let's look at the daily chart. You can see the cyclical rhythms in here. Interestingly, you can see here our option bias indicator right there, is yellow. It's a little hard to see that this has not turned positive yet right there, though it certainly should be if the market is able to hold up here. So we're going to call that indicator neutral right now, and that might be coming off of what was this corrective period right there. Now you can see what we had looked for was a deeper correction down over here into the like 500, 555 area, but certainly into these weekly supports. That did not happen. And this question was there: which cycle makes the weekly trough? If it's this one over here, then it bottomed pretty much right on time, as you can see right there. And it made for only that shallow 3% correction that we saw. If that trough over here is the bottom, then this is the pattern that we will see coming up in here, as that, this rally will fail. At the beginning of the show, I showed the stretched rubber band and that chart, and then the market will have a significant pullback. If the weekly has bottomed, and let me go back right over there, if that a November low did occur, then we're already in this rising phase right there. Then you could get up higher here now, and certainly the correction will create a positive configured cycle, much like you saw right in here and right in here. And right here, though, this one did come down a little close to where the cycle had began and threatened breaking down, but did not. Gave us a little warning through the 78.6 and then came out here. And once it moved above this level right here, it did break out and tell us that the market was strong. We have the slim ribbon right over here turning positive right now, as you can see. And when I look at the momentum indicators on the daily, you can see this turned green again. On the bottom is the slim ribbon PO, and it tells you what the conditions are of the market and when there is likely to be a momentum resumption, as you see right over there. And now you can see right here as it turned neutral for that very mild correction and then turned green right here, as you see there. So you have a strong momentum condition as the corrections are only getting you to neutral and then turning positive once again. Here you could see, as I look at the 2-hour chart, I have the daily cycles overlaid on them. This, as we said, was the declining phase, which made potentially the trough in early November right over there. And this is that next rising phase right over there, which then does bottom sometime out in late November or early December. And you will see that there's a potential for this giving us a negative signal in advance. Note the little head and shoulders in here and the measured move as it came down and satisfied that, and how the market just avoided breaking below those lows there and moving up. So we're now in this rising phase right over here. Slim ribbon is positive, and on the bottom the market condition indicator comes down and tests that positive 25 and then turns up. When it tests this zone, and then moves up again, it is positive. It did that right here, and it also did that right over here. And each of those was the beginning of a cycle, and the market began to move up. So we have a lot of information here as we look at multiple time frame analysis, weekly, daily, the daily momentum, and the 2-hour intraday conditions, and all of that continues to give us bullish readings. So while the question is out there about this decline over here or how it looks over here, we have to say that the market is giving us bullish readings, and we're going to respect that and let the market tell us if it is going to correct. In order to really give us a corrective reading that the market is in a corrective period, it would need the SPY would need to get below 568.44 to break that cycle right over there. The warning would come at the 78.6%, but as you see, it came right over here and avoided the breakdown right there. So for those of you that are looking at the daily charts, that's the information there. There is a little bit of resistance right here on the 61.8% of this move. That is at 601. And then again up in here at the weekly extension at 612. So those are the key numbers: 612 up here, 601 right over here, and the breakdown level right over here at 568.44. A market that is incredibly strong and at the same time, incredibly stretched. So I think it's important that you consider that the market has come a long way. It has really reached levels of valuations that are very extreme, and the radar is up for a reversal, but not until the markets tell you that it's happening.